If you don't know the head and shoulders pattern, then you won't know how it made me $7,000 in this trade alone in literally 45 hours. Now, if you don't understand it, it's okay, don't worry about it. In this video, I'm going to explain to you everything you need to know in order for you to understand how to use the head and shoulders pattern and how you can benefit from it. And I'm going to show you how this has personally made me anywhere from $50,000 to $100,000 in one single day. By simply understanding how to use this pattern in the middle of the chart or at the bottom or the high, it's going to indicate to you whether it's a good time to buy or to sell. So in this video, I'm going to show you how you can identify it and how you can leverage it to make money in the markets every single day, how I do it. So first things first, in order for you to understand how this pattern works, I have to give you some context so you understand what it is. So how does the head and shoulders pattern actually work? So the head and shoulders pattern is actually a full reversal pattern. There's continuation patterns and there's reversal pattern. The head and shoulders is a complete reversal pattern where you would be going against the trend of the market where it's going in that direction. Let me explain. A normal head and shoulders is something that you would see at a top of a market. It's very simple to identify because you would see a left, a head, and then a right shoulder. It almost looks like three triangles. You have two little ones, which are the shoulders, and then you have one big one, which is the head. This is what is called a head and shoulders. So now you'll usually have this head and shoulders at the high of a market, whether it's been going bullish for a long period of time, or you've hit a very strong level of resistance. Now, once you get this head and shoulder pattern, and after it breaks the neckline, that is when it is confirmed that now this market is going to completely reverse. Now, this is gonna make more sense when we get into the charts in just a second. And then an inverted head and shoulders is literally the same exact thing, but just inverted. It's where you have a head and shoulders, but at the bottom of a market. So this is a bearish market that has been going bearish for a very long time or a significant amount of time, or we have reached a strong level of support and then we have formed the inverted head and shoulders, now indicating to us that now this market is going to shift, start going to the upside. So remember, the head and shoulders pattern is the complete opposite of a continuation pattern. This is a pattern that is only meant for reversal. Usually happens at a high or at a resistance or at a low or at a strong level of support, showing us that the market is going to completely reverse. So now that you understand what the actual head and shoulders means, I'm gonna actually show you what it looks like on the market. Now, keep in mind, head and shoulders happen on all different time frames at different times, and some of them can be prettier than others. Others can be a little bit harder to spot, and others can be extremely obvious, but they all have the same effect because what matters is the way the market shifts in structure. But all this is gonna make sense right now. So as you guys can see right here, this is a very clear indication of a head and shoulders happening at a high in the market. As you can see right here, this is a left triangle right here. This is the bigger triangle right here. And this is the other triangle. This is also known as the left shoulder. This is known as the head. And then this is known as the right shoulder. There's actually a tool on TradingView that is called the head and shoulders pattern. You can find it right here in this section called head and shoulders. And you can throw this from the bottom here, put it at the left shoulder, then you raise it up to the head, and then you drop it back down, and you can see how you have a beautiful head and shoulders pattern. This is what you can consider a valid and correct head and shoulders. Now, this happens the same as a inverted head and shoulders. It is literally the complete opposite. So to keep it very simple, I can just flip the chart and you can see how now this right here is an inverted head and shoulders. You have the left, you have the head, and then you have the right shoulder. You can see how the market completely shifted and continue headed in the opposite direction of the market. And these happen literally in every single time frame all throughout the charts. We have to be very selective on picking the right head and shoulders because they could be a little misleading. Now you're probably wondering, how does this head and shoulders work? Does it just happen randomly in the chart? And the answer is yes, but it's not effective. So I'm going to be showing you right now how to actually spot up a head and shoulders at a strong level of support or resistance so that you can take advantage of it. This is where you actually want to be entering the trade off of the head and shoulders. So as you guys can see right here, there's actually multiple head and shoulders in this market right here, but we're gonna spot one example. So if you guys want, try and pause the video for a second and see if you could spot the head and shoulders, whether it's a regular head and shoulders or an inverted head and shoulders. So this right here, there's actually a beautiful inverted head and shoulders that is rejecting off of this level of support right here. As you can see, this is creating a left head, and then this right here would be our right shoulder. You can mark this as your right shoulder. You could also include this as your right shoulder. What matters is that you're getting the triangles and you're getting the shift to structure where now price is going to then reverse And most importantly, you are rejecting a strong level of support. If you notice, after that happens, then you have the break, the retest of the neckline, and then the complete reversal in the market. These head and shoulders, you only want to take them at a strong level of support as an inverted head and shoulders, or you want to take them at a strong resistance level as a regular head and shoulders. So as you can tell, this market was heading to the downside, and then we reached the level of support. We created the head and shoulders, and now it's the complete reversal pattern that makes this market now shift to the upside. So if you see it like this, you can see how this right here is the head and shoulders pattern and how the market has now shifted. This is literally the same exact price that you're seeing right here, but in a line form chart right here. So now you're probably wondering, where do you enter the trade on the head and shoulders? And there's actually a couple areas where you can enter it, depending if you want to have a high risk trade or if you want to have a conservative risk trade. And if you want to know what is the difference between a high risk trade or a low risk trade, click this video right here where I literally explain to you the right risk management that you should have on your personal account, funded account, or when you get started in trading. Because head and shoulders is very key into trading, and if you use the right risk the right way, you can make a lot of money in trading. So make sure you check that video out. But in this trade right here, for example, you could have had 3 different entries on this trade. So we can have the high risk trade first. So before we get into that, we have to explain what is a head and shoulders entry. So as you can tell, as of right now, this right here is not a head and shoulders, because as of right now, this can simply create a new lower low in the market, and there's no head and shoulders. The only way you get a head and shoulders is once you get this structure point to break above the last structure point. And then the right shoulder is once it starts having a rejection from the equal left shoulder zone. You want to make sure that the shoulders match up more or less at the same area. They cannot be always perfectly the same. So, give it some breathing room. It doesn't matter if this one's a little bit higher or it's a little bit lower, because obviously the markets are going to change. So give it a little bit of the breathing room, but they kind of have to be more or less within the same zone. But the key point here is that this structure point has closed above that structure point. Because if you notice, look at the neckline. The neckline is this dotted line. As you can see, if it is under that structure point, that line is still facing to the downside. And remember, this is a reversal pattern. So you want to have the most indications you can that this is now going to reverse. And as of right now, this is not a strong indication that it has reversed. Once this has broken above the structure point, you can see how now this line has now shifted to heading to the upside. And you can see how it goes to the upside for the long term. So you want to make sure that when you're marking off your head and shoulders, this line of the neckline is always heading up if it's an inverted head and shoulders. And if it's a normal head and shoulders, you want to make sure that it is heading to the downside. So for example, this right here would not be a valid head and shoulders because this is still heading to the upside. A regular head and shoulders is a reversal pattern, meaning it's going to now head to the downside. So you want to make sure that the neckline is under this structure point, indicating to us that now we're heading to the downside. So now that you know that the neckline is heading to the downside, where do you enter the high risk trade? That's where a lot of people want to know. And it's very simple. It's at the potential right shoulder. And why do I say potential? Well, because there's nothing confirmed yet that this is a right shoulder. For all we know, this can have a pullback to here, and then this have a then push to the upside. And it's a fake head and shoulders, which happens all the time in the market. That's why this is considered a high risk trade, because it's still not yet confirmed as a head and shoulders or inverted head and shoulders. So you would be taking the trade at the potential right shoulder. Once you have a rejection candlestick, you would enter your trade right around here, and your stop loss would either be right above the head or a little bit above the right shoulder. And this is a very high risk trade, but it has a lot of reward with it, because if you get this trade right, not only do you completely catch the right shoulder, but then you can scale in once you enter on the retest of the neckline to then head to the downside, which is the actual trade you should be entering once you have a head and shoulders. So this is a high risk trade, which is entering at the potential right shoulder. And then the actual trade is entering at the retest of the neckline of the head and shoulders. So this is the same exact thing, but on a reversal pattern to head to the upside. You would be entering the trade at the potential right shoulder. Stop loss can be above the head or right around the shoulder. And then you are predicting for the shoulder to completely form here. But the actual trade that you should be taking is at the retest of the neckline of the head and shoulders, where this is where you either scale into a trade or actually get into your first position on the head and shoulders. So if I literally take this same exact example that I just showed it to you into this trade right here, you guys can see how the actual head and shoulders, if you mark it off right here, if this were to be the right shoulder, this is not the ideal right shoulder. Why? Because the neckline is still heading to the downside. So that is why this right here would be the ideal neckline, because now you see how it's shifting to the upside. So this elbow would go right here. And then your first high risk trade would be taking at the equal right shoulder. If you notice, it is basically the equal to this point right here. Just to get a little bit more clarity, I could bring it up and you can see how this is exactly how it looks. So you're taking it approximately at the equal of the left shoulder. So this could be one entry right here. And if you notice, you have your bullish engulfing candlestick, your morning star formation, retest of structure, all of this stuff that I talk about all the time. I also explain in this video right here, which it explains it to perfection. So now that you enter at that point right there, that could be your high risk trade. But let's say you don't want to enter the trade on the high risk trade, which is perfectly fine. You want to enter at the break and retest of the neckline, by all means. And that is exactly where this trade right here comes in. You have a break and then a retest of the neckline of the head and shoulders, and the same exact bullish engulfing morning star confirmation. You get it right here. And then this would be the ideal entry signal. So you have the actual trade you should be taking, which is the retest of the head and shoulders, which is the normal risk trade. And then you have the higher risk trade, which is going to be the right shoulder retesting the left shoulder area of interest. Now with this pattern, you're gonna see it everywhere in the markets, the 1 hour, the 4 hour, the daily, the weekly, all of these time frames. Obviously, the higher the time frame, the more respected it's going to be. And with this pattern alone, it's going to be plenty to make money in the markets if used correctly with a trading plan. And when the students incorporate this pattern with my trading plan, they make anywhere from $1,000 to $1,500 a week using my set and forget strategy. And you're probably wondering, what is the set and forget strategy? Just click the link in the description below. I have a video there for you that explains absolutely exactly what it means. Students are making anywhere from $1,000 to $1,500 a week in their first 3 months as a beginner set and forget trader, where I incorporate these patterns along with my trading plan to have an edge over the market to make anywhere from $1,000 to $1,500 a week as a beginner set and forget trader. If you want to know more about it, just click the link in the description below. I have a video there for you that explains everything to perfection. With that being said, I hope this video is very useful to you guys and you can now make money using the head and shoulders pattern. Just make sure you have a key trading plan to now excel and take you guys to the next level. Appreciate you guys watching the video all the way to the end. I'll see you guys in the next video.